Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights and inspiring stories. Today, we're going to explore treasury management for small businesses, a critical discipline that can make or break a company's financial stability and growth. So, what is treasury management for small businesses? In simple terms, it refers to the process of managing a company's financial resources, including cash, investments, and funding, to achieve its strategic objectives. This involves a range of activities, from cash flow management and risk assessment to investment decisions and funding strategies. Effective treasury management enables small businesses to optimize their financial performance, minimize risks, and maximize opportunities for growth. To understand the importance of treasury management, let's take a step back in history. The concept of treasury management has its roots in the 1970s, when large corporations began to recognize the need for specialized financial management. Over time, this discipline has evolved to accommodate the unique needs of small businesses, which often face distinct challenges such as limited resources and increased vulnerability to market fluctuations. At its core, treasury management for small businesses is built on several key principles. First, there's cash flow management, which involves forecasting and managing a company's inflows and outflows to ensure liquidity and solvency. Second, there's risk assessment and mitigation, which requires identifying potential financial risks such as interest rate changes or currency fluctuations and developing strategies to mitigate them. Third, there's investment management, which involves making informed decisions about where to allocate surplus funds to generate returns and support business growth. One influential thinker who has shaped our understanding of treasury management is Peter Bernstein, a renowned economist and expert in financial risk management. According to Bernstein, the ability to manage risk is the key to survival and success in business. This insight highlights the critical role that treasury management plays in helping small businesses navigate uncertain market conditions and make informed decisions about their financial resources. So, how does treasury management play out in practice? Let's look at some real-world examples. Take Amazon, for instance, which has mastered the art of cash flow management by optimizing its supply chain and inventory levels to minimize working capital requirements. This has enabled the company to invest heavily in growth initiatives, such as research and development, marketing, and expansion into new markets. Another example is Airbnb, which has successfully managed its financial risks through a combination of hedging strategies and diversification. By spreading its investments across different asset classes and geographies, Airbnb has been able to reduce its exposure to market volatility and maintain a stable financial foundation, even in the face of unexpected disruptions, such as the COVID-19 pandemic. If you're an entrepreneur or business owner, here are some key takeaways to keep in mind. First, prioritize cash flow management by maintaining a cash reserve, monitoring your accounts receivable and payable, and optimizing your payment terms. Second, assess and mitigate financial risks by identifying potential threats, such as interest rate changes or currency fluctuations, and developing strategies to hedge against them. Third, make informed investment decisions by evaluating different asset classes, such as stocks, bonds, or real estate, and allocating surplus funds accordingly. In addition to these tips, there are several tools and resources that can help small businesses manage their financial resources more effectively. For example, accounting software, such as QuickBooks or Xero, can provide valuable insights into cash flow and financial performance. Treasury management systems, such as Kyriba or Revol, can help automate financial processes, such as payments and investments, and reduce the risk of errors or fraud. Research has shown that companies with effective treasury management practices tend to outperform their peers in terms of revenue growth, profitability, and return on investment. According to a study by the Association for Financial Professionals, small businesses that prioritize treasury management are more likely to achieve their financial goals, expand into new markets, and create jobs. In conclusion, treasury management for small businesses is a critical discipline that requires careful attention to detail, strategic thinking, and a deep understanding of the business environment. By applying the principles of treasury management, small businesses can optimize their financial performance, minimize risks, and maximize opportunities for growth. As Warren Buffett once said, "Price is what you pay. Value is what you get." In treasury management, it's essential to focus on value creation, not just price. That's it for today's Business with Louis. Be sure to like, share, and subscribe, and remember, every great business starts with action. Make your next move count.